Hey everyone.
Hello everyone. My name is Vera Güttinger. I'm the head issue relations of the Swiss Stock Exchange, and I'm here with Michael Füglister. We will present this event today to you. We will moderate the whole day through, and are happy to announce these two big initiatives from SIX, the new ad hoc reporting interface that we will show you afterwards. And
Yes, and apart from the ad hoc, actually it's 4 parts. We have the ad hoc, then we have a keynote speech by Thomas Kindler, the global head of exchanges. Then we have our new provider hub and the experts that will present on in various panels. And then we have the most important part, the lunch.
And use this opportunity at the lunch because we have a lot of experts here today. We have a lot of lawyers here. If you have questions, ask them. You have the opportunity today.
Correct, yes. But I would say, Vera, let's kick off maybe first with the first part, right? The ad hoc reporting that we have introduced a new interface that we want to show to everyone, a live demonstration, answer questions, and show you how it is used and when it will be introduced.
Yes, thank you. We will start. So many of you know me from my role at SIX now, but many years before I was sitting on the other side, so as an IR manager myself. And I had to do ad hoc announcements myself a lot of times as well. And it's never a quiet Tuesday afternoon. It's always very early in the morning, very late in the evening, or during a crisis call. So it's always a stressful situation. And then you also have to do the ad hoc announcement to SIX exchange regulation in particular. And what should it be? It should be efficient, it should be intuitive, because you also just use it several times a year, so maximum 2 to 4 times most of the time. And so what was it? What we hear also from our issuers all the time, and what I said myself, make this tool make it simpler, clearer, and more intuitive for us, so that we can use it quite simple this few times a year. That was the reason, and that was why we do this today. The new tool will be named AHP Digital. It means ad hoc publication.
Yes.
Ad hoc publication digital. I mean, it's not a change of regulation. Regulation is regulation. It must be done, but it's regulation aligned, of course. But it is issuer informed, which means you said to us that we should make it more intuitive, and we listened and did it now. So you asked, we listened. And for that reason, we have done it. So you always said to us, it's not intuitive enough, especially if you use it very infrequently. It's prone to errors as well. It causes a lot of misunderstandings. It's creating unnecessary stress in stressful situations. And it is also an operational effort that is on top of the other things that you have to do. So the objective is for us to create one regular reporting experience for you, because this is what we can change, not the regulation, of course. So the new AHP Digital is not just a user interface refreshment, it's a result of a very concrete feedback from issuers. So we sat together with issuers and looked at the platform and looked what we could improve there. And here are just some improvements that we have realized with this AHP Digital. You will see it very soon when I show you how it looks. So it's more intuitive, it's self-explanatory design. there is a reduced risk because, and that's the new thing, it has a machine-to-machine interface, and that's also very interesting for the many providers here that we have that support our listed companies with their talk publication, because now the tools that you use for other news releases, you can also make a machine-to-machine interface to this ad hoc AHP digital platform. So basically you have, with one click, you also submit the ad hoc release to SARE in the future when we release it. So I think that's the most or the new innovation, which is the most interesting also, and of course also the new platform. And now, don't let me speak too much.
Yes, Vera, maybe you can, we highlighted some of the key points, key innovations that we have plowed through the last, 2 years or so? 2.5, something like that, yeah.
Something
so
like
yeah.
that, yeah.
Together with IT, with exchange regulation. Could you please show us how we log on to this tool?
Sure, of
and
course.
How we use it?
Of course, yeah. So, yes. You know this, you should know this login interface already. It has to be used now already for the Connexo reporting. By the way, Connexo reporting in the future will be completely replaced. So it starts with the ad hoc publication, the AHP digital, and then the other tools will follow. So this is with the Futura app. Now you have an app installed on your phone, and you can accept, and this is the new login from 6 basically. Okay. And in the future you will come to this welcome page on ad hoc publicity. There you will find also the articles of the rules where where this all come from basically, so the regulation text and where you find the regulation. And what is also new is that so every company has one welcome or one of these desks, and all users of this company come to the same page.
So Vera, so I can, as a company, I can have several users then now?
Yes, you can have several
good.
users, and in the future these users can also be managed by one person from the companies basically. What is also new now is that you have an overview of all ad hoc messages that you did in the past. So every user of your company did, basically. So you see drafts, you see submitted messages, you see obsolete messages. So you have everything on one place in one overview. You can also see the publication dates and everything. And you can also filter. So if you have, of course, a couple of or a big amount of ad hoc messages that you already worked on, you can filter per event title or date or whatever. So that's what you can do now, and that's a new thing, which is might be very simple, but was not the case before. We are drafting now a new ad hoc event. We say the test company has a new CEO, so we fill out, and you see now also the mandatory fields here. So we say that the test company has a CEO change. Sorry. We say we sent it out today, after trading hours, of course. At 7 o'clock, so you can put in the format, so it will make the format right afterwards. Then you have to check the boxes. That's also something that you know, that you also do the other distribution channels. You have now, this is a new question to state if it's a half-year or full-year report, simply because if you have a full-year or half-year report, you also need to submit it now via Connexo reporting with regular reporting obligations.
So Vera, then is that enough, or do I still have to do the regular reporting obligations.
No, yeah, you have to do the regular reporting obligation
So this
as
is
well.
So this is just for SEER to know that it goes hand in hand with the ad hoc publication here. Yeah.
Exactly, yeah.
Good,
So this
okay.
is that they know that is also a half-year report, so that they look if you do the other regulation as well, basically.
Good.
In that case, it's not a half-year report. Then you get your phone number in. If you saved your phone number before already on the platform, it will be already filled out. So it's the person that is the user has its a telephone number, and it's always filled out already before. So you don't have to do it, but now I have to do it here. Good. So then you can have additional remarks to share. You can see also here always who is doing the draft version, so who modified it last. You have the event history here, so if you change the event several times, you will also see when it was changed, who changed it, and then what you, maybe you submit it now because, but normally you should have an attachment, so you cannot submit it without the attachment, so the system always says to you, you forgot something.
So the system is a bit dummy proof. You cannot send anything without filling out the form completely.
Exactly.
Good.
Now I choose a file. I have a tester talk here, surprisingly, already prepared. I say it's an ad hoc announcement. You can also upload other attachments. There might be some occasions where you need to upload other attachments as well, but normally it's just the ad hoc announcement, basically. Yeah. So that's now successful. Then you always have to save changes. It doesn't let you do anything without saving. And then you can submit it to SER. And at the same moment when you submit it to SER, it will appear also, because SER has the same overview now. Before it was just an email, but now SER has the same monitor and sees in the moment when you submit it, SER sees the message as well, which is also a new thing that was not before. And here you see a new status, it was submitted. Then you can go again to the overview, you say, oh, test company CEO change. Well, yeah, and then somebody comes and wants to change the message again. Maybe it's 6 o'clock in the evening, the CEO comes, oh, I want to change this word. So then you think, oh no, I have already submitted it to SER, what do I do? Well, yeah, now you can do the one, or another user, maybe the one person that created the draft is already home, so the other user can go and correct the event. So you can say text changes or something like that. You correct the event. Then you have a look at all the things. Okay, we'll send it out at 7 o'clock still. So now you upload your new attachment. It's also prepared here already. You say it's an ad hoc announcement again, you upload it. Yes, you save your changes, you check it again. So you check again all the things, and then you submit it again to SER. So what happens now in the event history? We can go again to the overview. Okay. Good that we have the IT support here. Yeah, surprisingly something.
Little bug.
I think there's a little bug with the test version now. But anyways, I think we saw enough. So that's how.
We can just refresh it.
We try to refresh it again. No, It's sorry.
Fantastic.
Fantastic. Now it's here again. Sometimes it's just a refresh, but as I said, it's a test version, so it's a very early stage here. So basically what you see now is you see the obsolete event. You always see the status of the events now. You see that this event that you sent before is obsolete. It was with the wrong attachment. And now here you have the submitted event that you created afterwards with the new attachment, and you also see who it submitted.
That's pretty cool, because then you can also see, right? You have a PDF now.
Yes, you have a PDF now,
A confirmation,
actually,
right?
a confirmation
Okay.
PDF. So if you want to show to your management or print it out for your management that you submitted the ad hoc release, you can print it out, give it to management. You have always the one person that submitted the message, and yeah, so that's the
useful.
confirmation now.
That's great.
Good. So I think.
But Vera, let's say worst case, I'm with a listed company and the CEO or the board says, we don't want to send out the ad hoc message at all, but you have already submitted it. What do you do?
I mean, you know, Sarah got the message at the same time that you submitted it, so they will see the same. And now, I don't know, the CEO decides not to change, basically. Maybe that could be. 6:30, they say, no, nothing will happen. Stop it. Then you can again go to correct your event, say ad hoc will not be published. That's something that's the only thing actually that you can do now. Correct the event. State again that ad hoc has not been published. And I would, in this case, also call SARE to tell them again that it was not published. But here you save your changes again, so you submit it, and that's what you can do, basically.
So basically, you cannot actually delete it, but you have to inform SARE that your draft is obsolete, that you have to do it via text.
Exactly, yeah.
Correct.
When you already submitted it now because it's there, I mean, you cannot just say come back, but you can then say it's obsolete. It was not. It has not been published actually. Yeah.
Great, fantastic.
Good. So I think that's what we can
show for now, right?
Exactly.
Yeah.
Yeah. Sorry.
There have been two attachments now to the new submitted one. So do I submit the old and the new one? Because if you go in your submitted one, you have two attachments.
Ah, yeah, that's right. Yeah.
That's obviously I don't want to.
Yeah, I think that's something that that is there, so it will not go away. We can ask if this can be deleted, but I think from a documentation base, it needs to be there as well, so that they see what has changed actually.
So it's done via text, huh?
Because the obsolete message is then not visible, and they will just see the submitted message, but see that it was corrected. And then they need to know what was corrected, which you stated, for example, that the text changes, and then they see what changed in the text, basically.
Only the last one will be distributed.
Yes, to SARE. I mean, this is just, you don't publish it, it's just SARE. It's just SARE information.
So the tool that SARE has looks pretty much one-on-one, nearly one-on-one, like this tool here. It's like a mirror, more or less, you know.
Exactly, yeah. And this is really, so the ad hoc, so you don't publish anything with this tool, it's just the message to SARE, and that SARE is informed in the moment that you send out the ad hoc. Therefore, in the best case, you send it to SARE before you publish it, because you have to insert the publication time when you publish it, so that SARE can have a look if it's published at this time, basically.
Fantastic.
Yeah.
EQS,
Mhm.
and obviously they have the interface with there.
Mhm.
But if I log myself in here on this platform, will I see the history as well? Or only if I
Yes.
manually give it in?
If you have a user
Yeah.
for your company, you will be a user of your company, and if there is the machine-to-machine interface, they will feed in to
Okay.
this platform as well, and all users will see what was sent out from this
Okay.
platform as well. Yeah.
Okay.
Correct, yes.
Mm.
And we already reached out to some of these providers to
And they are
work-
also here today.
yeah,
So
to work on the machine-to-machine solution. Yeah,
Mm.
which takes some time, but we are on it together with them. Yeah. Are there any other questions? Please raise your hand and maybe wait for the mic to come. If not, we would then jump on to the rollout, right?
yes.
Is that correct? Yeah,
Yeah.
there's a question down there. Okay.
Sorry. We've learned from our lawyers that we're not allowed to upload anything to SIR during trading hours. Is this still true with this tool or not? That would
Yes.
be-
So it does not change regulation. The regulation is all the same. It's just a tool that will change.
Yep.
And it hopefully makes your life easier.
Exactly. And I hope you don't have to inform too often during trading hours.
Good, then we move on with the maybe also very interesting slide.
Yeah, maybe the next slide. Yeah, the next one. Oh yes,
The
here.
rollout and next steps. So
Yeah.
the rollout is planned in autumn 2026. And you will be informed well in advance, so that you know when it will come. And you have a 1 month pre-go live test phase where you can get familiar with the platform, read the manual, and test it as much as you want, so that you are prepared for the go live then.
So you will inform all the issuers and the users of Connexor in advance.
Exactly.
Send them the manual and say you have 1 month to test the platform, play with it a little bit, and then there's a cut, and the new platform is in function. Is that correct?
That's correct, right? Yeah. So then it will be completely replace the ad hoc messaging via Connexor reporting. What is going on then with Connexor reporting is the regular reporting obligations. This will still be done with Connexor reporting in this phase, because there will be also a new application for regular reporting obligations that will be on the same platform then. But it's planned to have it to go live with it in half year 2 next year. But we will of course inform you well in advance before. And the overall target in the end is that over time we have all regulatory reporting at 6 in one platform with one login, and for all users of your company that you can manage yourself. So that's the plan.
Oh, so there's a bigger plan behind it, a long term. Great. Super.
Good. So, any questions?
Yes. Are there any further questions from the audience? If there are no questions, I think we've done our job, huh?
Yes. Good.
Great. Then I think we can jump to the next part, which would be our second part of this fourfold event, which would be a keynote speech by Thomas Kindler, the global head of exchanges, who will do the bridge between the first part and then the third part of the event. Please, Thomas, the stage is yours.
Good morning. Warm welcome also from me. It's great to see a full room here with issuers and providers. So you have seen the new interface for ad hoc reporting already. In a moment, you will learn more about the provider hub. So rather than me explaining to you what has been built. Let me talk about for a couple of minutes why this matters to us. And I think when you look at the environment listed companies are operating in, one thing is objectively clear: the job has become more difficult. And that's not really a function of the volatility we're seeing right now. We've always had volatile times, but expectations have multiplied. Regulation has expanded. The speed of disclosure has accelerated. Investors expect disclosure faster, more often. And ESG has evolved from a reporting exercise to something that really actively shapes trust and valuation. And all of that lands on organizations and management teams that are stretched already. So this is real. It will not go away, I'm afraid. So the question for us is, how do we respond to that? What do we do? The traditional answer to that is very simple from a FMI perspective. We provide the infrastructure, we run the market, we set the rules, and beyond that, you are largely on your own. That's legitimate, but that's not what we want to do. We see the companies on our exchange not only as issuers, but as long-term partners. And we want to add value to that partnership, helping you to navigate through your obligations in the most efficient and effective way. So that is the common thread of what you're seeing today. The new ad hoc reporting interface is not just a better tool. It reflects a fairly simple ambition. And that ambition is to support you in the moment of the obligation. You should be able to meet it with confidence, without any unnecessary friction, without operational risk, and you shouldn't second guess the process in any way. Because in these moments, it's really about reliability of the process. And then the obligation ends. You're done, you have disclosed, you're compliant, and the practical questions begin. What do I do? Who do I call? What's next? Where do I even start? And the challenge is that the market for corporate services is large, fragmented, and surprisingly intransparent and opaque if you don't know exactly what to do and who to call. And this is where we think we can play a useful role. Not as a sales platform, certainly not as a professional service firm, but as a trusted marketplace connecting supply and demand. We are close in this ecosystem. We sit in the middle. We work with listed companies every day. We understand where quality matters, where standards matter, and we also understand where the costs of getting it wrong are high. So let me also be clear what it's not. We are not trying to do everything. We are certainly not building a one-stop shop. We are not expanding SIX into areas where we shouldn't be. We know very clearly where we are in the process. But we believe we can add real value beyond simply running the infrastructure by connecting, by orienting, and by helping companies to find what they need when they need it. And that's what we mean when we say SIX is an ecosystem partner for you. What you're seeing today is an early step into that direction. The provider hub will evolve, additional companies will join, the reporting tools will develop further, and you had questions already, how does that work and how it can be optimized and improved. We'll learn, we'll adjust, the services will get better over time. But what really matters to us is that the direction is right. And that direction is SIX should make your life as a listed company meaningfully easier. And not only on the day when you ring the bell, typically here now outside, but throughout the life cycle of being a listed company. So this is really what matters for us. What is our thinking behind the offerings you're seeing today? I'll stop here. The teams that are behind the initiatives that have built the services will show you far more concretely what it's all about. But I hope this framing is useful for you. And it's really about giving a commitment to you as partners. Thank you very much.
Great. Thank you, Thomas, for your words, for your keynote speech. Now, the third part of our event today is about the launch, the official launch of the 6 Provider Hub for corporate services. Vera, before we just jump in, I know you're eager to show the website that we have developed over the past, it's 9 months or something like that. Before we jump in, can you say what it is and why we're doing this?
Sure. So basically, you're an IR manager, you get a project from your CEO, imagine that situation. Maybe it's about something that it's new space for you, a new area of competence that you never touched before. And now you're thinking, oh, who could I call for this? Or how can I build up this project? Then you can go to this 6 Provider Hub. You think about, 6 did this Provider Hub. We can look if we find our service category there and find experts that are pre-selected by 6. And we call them 6 trusted providers because we are looking at some quality criteria, of course, for these providers. And then you can find the right experts for your needs there.
Okay, fantastic. So if I'm looking for a company that has, I want to change my CRM system, then I can go onto that page, to that website, select a couple of them, and then do a beauty contest, basically, huh?
Exactly,
Fantastic.
yeah. You can download an Excel file as well. You can call the companies, contact the companies directly via this website, and there are more than 30 service categories there that you can have a look and find experts.
Well, then let's have a look at the website then. And this is completely new. There's nothing similar on the Swiss market like this, huh?
Not yet, not that we know.
Good.
Good. Yes, so when you go to providerhub.6-group.com, you will land on this page. So that's the landing page. Yeah, so first of all, you can maybe look for the service category or the keyword that you need. I will not do anything now because I will not give any provider an advantage here, but you can look for it. And then you have there also, of course, some service categories listed there. You have the new providers that are there. And in the future, which is important, you will have on this landing page also insights, so knowledge that is shared by these providers, and you will have events that are shared. So specific events for different service categories that you might be interested to join.
Yeah, because from my experience also, sometimes it can feel a bit too pushy, right? And as a buyer in a company, you want to first have a first touch point. So you go to an insights page, read an expert piece about it, about a certain topic like capital markets day or whatever it is. You can then also will be able to look at the events agenda and see what kind of events the providers are offering and be in touch with them there. And from there on, step by step, you will find the right expert for your needs.
Yeah, and also with the events. So if you see some events there, normally you get from, 40, 50 providers emails for events. But here you will have all collected on one page. So if you have a free week in, let's say, June, and then you can see what events are there for these service categories from the providers that are on our hub, so that you can join these events here. So maybe we can have a very short look. Here we have our trusted providers listed. 26 are already there. We have already registered 31 by now, but not all of them have their page ready. But this is basically where you see all the providers there. You see all the services that they are offering. And yeah, so that's how the status is now.
So this is a bit the directory, huh? The directory find all the 6 trusted providers, and then you can search for keywords, right? For service category. Yeah, those 2 options you have, huh?
Exactly, service category or language also, because all these providers are offering services in different languages, so you can also choose your language. We have now, of course, the 4 common languages that are in Switzerland. So that's how it works here. And what we also have is you can search by service categories. So if you just are interested which service categories are there, you can just stroll through our service categories, and when you look at the show all providers, then you see the providers that are listed and offer this service category on our hub. So that's what it is for the moment.
But still, like, just give a quick example still. If I want to find one in, I don't know, communications, I'm a small cap or mid cap, and I really need some support in communications because I don't have it in-house, or just one person is doing marketing, communications, and IR. Where can I find this page?
Good, then I go to communication. So every profile that has now communications in will come. So it's 14 providers that offer communication services here already. Well, yeah, you can scroll through it. You can see also what are exactly the communication areas that they are covering. Yeah, I think with that.
Okay. And if I go under services, for instance, if I want to go financial communications, or what do we have here? If I scroll down a little bit, do we have the communications in here? Where do we
Yeah, we
find
have,
that?
for example, crisis and change communication.
Yes, for
we
instance.
have corporate reporting, for example. We have
IR advisory we have as well, huh?
we have IR advisory as
For all
well.
the companies who do IR advisory, maybe you just want to click on that one, and we can find.
And 6 results that have communication and IR advisory, and maybe we want to have a certain language. We want to have a German-speaking provider. Then all the German-speaking providers will appear here on this.
Fantastic. And you can then also export them at some point also via Excel at some point.
Exactly.
Yeah. Good. Fantastic. Yes, maybe just get a mic. Wait for the mic. Wait a second. She's just over there in the second row in front. Yeah.
Thank you. So I was wondering, you were saying earlier on you can directly get in touch with the suppliers from the website.
Yes.
So is that going directly to the supplier? Like I realize they have to fill in the form, and then it goes to you guys, or it goes directly to the supplier, to the
No,
provider?
it goes directly to the suppliers, right?
Okay.
So the suppliers or
Thank
the
you.
trusted providers are also managing their own profile on our page. So it's not managed by us. So all the content and everything and the contact details and so on, they are managed by the providers themselves, and they are also directly contacted. If you fill out the contact formula, you will reach directly to the right contact person of the providers there.
Can we maybe just show one of the examples of the we don't want to give any benefits to one of them, but just pick one of them maybe quickly. Okay, with Dynamics. I think, I don't know if you know Dynamics, but you can see they have their, they filled out their profile page, and then there's a form at the end that the clients that can use, or potential clients, just to reach out to maybe have a first chat about the needs and the issues. And that's for every other provider is pretty much the same. So we have plenty of touch points. Some of the providers load up some videos, some marketing material, and so on. So it's an iterative process where the companies then see who's the right provider for my company. Fantastic, great. Are there any other further questions from the audience? No? If not, Vera?
Yeah, I think then we will go on with the slides and with the interesting panel discussions, because today we have 31 providers that are waiting to answer questions and also present themselves, basically. You will recognize the 6 trusted providers at a glance with the 6 trusted provider logo. They can use it on their marketing or in their documentation, and then you can identify them and see who is the 6th trusted provider, basically.
Correct. Yes, very good. So, and we have around 31 providers right now. Down the road, there will be more. This is just a launch. We expect to have many more providers on it, and then of course we want to get the feedback of all the companies and the corporates, of course, as well, just to improve this platform, because it should be really develop itself and fit the needs of the corporates in the end.
Exactly.
Yeah. So now I think you can explore it obviously for yourself. You don't have to do it now, but we just put up a QR code. You can scan it, you can bookmark it, and you obviously find the login for the wireless connection to your right over there. Correct.
Yeah, then I would say we start.
Yeah, if there are no further questions, I think what we have planned is for today is we wanted to present all these providers, because we don't want to keep it in the abstract, obviously, just on a platform. So we have them here. We organized 5 panels today. In a way, it will have some sort of a speed business dating, because obviously we can't have panels that will last for hours and hours. So we have a very short speed business datings where they present themselves, who they are, what their services are. They will answer a topical question, and then most of all, it's also up to you, to the corporates, then to also ask your questions either right after a panel or during the networking lunch. Okay, great. Then I would say we start with the first panel then. Can I call up the first panel, which is boardroom readiness, governance, leadership, and pay under stakeholder scrutiny. May I call up Malte Müller, Rob Hartmanns, Beat Schweitzer, Wolfgang Müller, and Yves Mauchli, and Michael Oplu-Stiel. Das kann ich auch brauchen. Perfect, that is one here. Great. So. You can sit down, you can stand as you wish.
Good, then maybe we start with you, Malte. Maybe you can introduce yourself.
Thank you. Yes, my name is Malte Müller. I'm the managing partner of Schilling Partners. We are an executive search firm, so we are headhunters based in Zurich, actually not far away here. Our office is in the Prime Tower. And the company was founded 30 years ago by Guido Schilling. That's where the name comes from. Then in 2013, I joined the company and took it over in 23 by a management buyout. And since then, we are expanding the business to every single industry branch that is applicable to Switzerland. So we have 10 partners which have their special areas, for instance, in banking, in insurance, public sector, in life sciences, in consumer goods, and my personal focus is industrial goods and energy. And before Schilling Partners, I've been 12 years with the Boston Consulting Group as a strategy consultant.
Fantastic. Thank you. Yeah, I just may hand the mic to the next person right away. Maybe just do a short introduction of you guys, and then we go over to the questions. Fantastic. Thank you.
Thanks a lot for the introduction. Happy to be here as well. Beat Schweitzer, my name, representing EY today. Not today, tomorrow as well, of course, if you reach out to me. I have one job only, even though I do lecture also on some universities, but it's always for EY. I have a lot of experience actually in corporate communications, investor relations, and mainly focusing on sustainability. So if you want to talk about topics with me, that's the best chance you got to give a good answer. But obviously, as one of the largest consulting firms globally, we have 4 service lines actually. We do a lot of consulting across different topics like risk, like supply chain, like tech, AI, big topic of course for us as well, accounting, gap conversions, etc. We have a strong presence in IPO readiness and IPO team as well. We have tax colleagues here with me as well, focusing on M&A transactions, strategy overall, and of course reporting disclosures, that's also part of it. And all of us forget it, we also do a little bit of audit, not to forget about that one. So it's quite broad that we do. We have global presence of over 400,000 people globally, but we're also very strongly focused locally across 10 offices in Switzerland. So yeah, our USPs, I would say, very much integrated. We don't work in silos. We work very strongly across different fields and different countries, different teams. I think that's also what the clients request, the interconnectivity. And of course, more and more now, this is really powered by technology and AI. That's a big thing that we invest into. And that's also shaping then our corporate culture, how we work together, and we're not replacing people. That's not the narrative that we're going for. Of course, we need to have the conversation about efficiencies and what the implications are. But overall, for us, it's all about long-term and strategic value creation for companies and for the stakeholders.
Fantastic, thank you.
Good morning, everybody. My name is Rob Hartmans. I'm an equity partner of Hirzel-Neff-Schmid Consulting. That's quite a complicated name. We are famous, well, you call us Die Konsulenten or maybe HNS. I'm here, I'm not a managing partner. We don't have a managing partner. We have also just a consultancy of 12 partners, and we have a management committee, and I'm part of that, and that's why I'm here today. So if you're working with us, you just work always with the partners. We don't have employees, we don't have a middle layer, or we don't have juniors running around. We are just, if you're working with Hirzel-Neff-Schmid, then you're working with always with a partner. We are busy in communications and public affairs. We deal with all the topics that communications is about. And we have offices in Zurich, Bern, and Geneva, and we are always also part of a huge international network, so we can also work abroad if needed. We are very happy to be part of this provider network and part of the SIX ecosystem, and I hope you enjoy the day.
Fantastic, great.
Yes, good morning, Wolfgang Müller of MLL Legal. As a legal advisor, we advise issuers and banks for more than 30 years in all kinds of capital markets transactions. We focus on equity capital markets and there on the mid-market transactions between 150 and 300 million. One special experience we have is working as a so-called transaction counsel, being the sole legal advisor on a transaction. So we have built up a good reputation over the years in this respect, balancing interests of the issuer and the banks on a transaction. Another specialty is mergers of listed companies. That's a transaction, kind of transaction which is not too often seen. We have done quite a few of them in the last few years. Yeah, and I'm heading our team. We are in 4 offices in Switzerland and also in London and Madrid.
Fantastic, thank you.
Good morning, everyone. My name is Yves Mauchle. I'm a partner at Baker McKenzie Switzerland and act as co-head of our capital markets team. As an international law firm, we are, of course, particularly focused on cross-border business, but we just as much advise domestic issuers on domestic issues. We are Swiss lawyers here in Zurich and have the local expertise and market knowledge, of course. The offering is full service. We do all kinds of equity, all kinds of debt, any capital markets product you can imagine, public M&A, and of course ongoing legal and regulatory compliance. A nice example of a recent mandate on which we advised was the IPO of Sentiel less than 2 weeks ago, where they rang the stock exchange bell over there. This came from the restructuring of the Hochdorf, which was in a multi-year process, restructured, put back into form to be able to adopt a new business. And this now led to the reverse merger with Sentiel and a very successful start at the stock exchange.
Fantastic, thank you.
Thank you very much. My name is Michael Oplustil. I think I'm representing the youngest companies here on the stage. So as a company, we're very young. We've just been founded 3 years ago, Embera Partners, but we're run by senior advisors, by senior people. Basically, we have 2 business lines, that is strategic investor relations advisory and mergers and acquisitions, where we are running a business intelligence business. So we are basically focused on the data around shareholders, which are stakeholders to most of you in this room. And just to give you an example, and why our founder, Andreas Posawatz, which might some of you know in the room, is not present here. We are currently working on an acquisition. A big Italian bank is trying to buy a big German bank. That's quite a busy project currently, and there we are a small part of one of the teams. And I think that gives you a flavor of about what we are doing. Thank you.
Fantastic, thank you, Michael.
Good, then I would say we start in the questions round. Leadership quality is certainly a core driver for everyone. So maybe I can ask a question to Malte. How have investor and board expectations of executive leadership profiles changed over time?
Okay, thank you for this question. I see basically 2 major trends or 2 major implications for investor and board expectations. One is the hot topic of artificial intelligence. I mean, this is really a core driver that you will also see in every requirement on a C-level position or a board-level position. I think this is nothing to be delegated to a digital department or anything like this. It is expected that each and every leader today has some kind of insight into this topic and is aware of its implications and also knows how to use it in his or her line of business, being it in operations, in HR, in financial, or in other topics. So this is certainly one core trend that I see. Then the other thing that I see is in boards of directors especially, we are moving from a general board of trusted networks to a more specific profile, a competency-based profile, where you have experts on the board for special topics. Let me give you one example. I have a client which is a listed company in Switzerland. They are now expanding their production facility quite heavily globally, and they want to build production facility with the highest amount of automation that is possible. So they were looking as a board member for one person who has this deep production know-how and has experience with dark factories, smart factories, to be a sparring partner to their operations department. And I think this is another trend that I see. So in general, I can say the expectations have shifted from a status and general leadership credibility towards a relevant expertise, technological literacy, and then also direct strategic impact.
Great.
Thank you, Malte.
Thank you, Malte. Leadership can be, good leadership can be expensive. I would have a question first to maybe to Rob Hartmans quickly, before we jump to you, Beat. So because executive compensation, that remains one of the most also emotionally charged governance topics in Switzerland. where do boards and management most often misjudge how compensation decisions will be perceived? And what communication mistakes amplify then also the backlash?
Well, thank you for the question. I think one of the problems is that boards and management people tend to think it's about numbers. It's not about numbers. What we're talking here about, I think it's about the impact in the context. Is it fair compared to something? How about the timing? Is it credible? So I think it's not a question of misjudgment, but underestimation. Is it, for example, fair compared to what employees? Is it fair in the context of the company performance? Are you not growing, but the only growing thing is the bonus, for example? And then one thing that has to be addressed always very strongly is the thing of complexity. Mm-hmm. Do they understand how it comes to these numbers? So, because people doubt whatever they don't understand, they think, okay, that's something, they want to hide something, and you have to really avoid that. So I think it's very important if you touch on a topic and then you have to explain simply. You have to provide the context, and you have to address the timing actively. And also, and that is something that gets forgotten often, start internal, because you people internally need to understand what is going on, because they are asked in the private and the business life, what do you think about? And if they don't come, they are not able to explain that, then well, it is not so good for your reputation.
Right.
Thank you.
Thank you, Rob.
So the next question goes to Beat from AY. So we are talking about sustainability targets. They are moving from narrative commitments into measurable performance metrics. So when linking executive pay to sustainability performance, where do boards risk creating false incentives rather than real impact? Beat.
Thanks a lot for this question, because first of all, I think this is not yet mainstream. That I don't know how many of you issuers have actually embedded ESG into incentive schemes. Often it's also the question, what is the quality of these? Sometimes we see generic statements. ESG is also considered when we talk about remuneration. The exact mechanism then is not clear. So we really need to talk about smart target setting, accountability, can we measure it? And then I think very soon the conversation drifts towards the quality of data, and then we need to talk about processes and controls. We need to talk about maybe also internal audit, whether they are involved, external assurance, whether this is playing a role, and also the governance setup overall. What are the competences and skills at the board of directors level to set certain remunerations in the remuneration committee, etc. So we have a little bit of a greenwashing risk that we see that we can mitigate by using these factors. Aligning with standards, I think, helps a lot as well. But one thing that I think we need to also then reflect from time to time is what a bit the challenges are behind it. And there particularly I see not just the trade-offs between financial value creation and other dimensions of value creation, but most importantly also time horizons. Often we talk about short-term incentives in variable pay, financials, we go from quarter to quarter, and the best we have then a yearly review. But when we talk about sustainability, for instance, net zero, I think will also be on the panel later on. Net zero is the conversation, and we talk about transition plans. That's not what's happening on the next 1, 2, 3 years. We talk about targets for 2030, 40, 50. So that's a completely different time horizon that we need to be aware of. And sometimes it's just easier if you go for the simple KPIs. You go for outputs rather than really impact measures. So we need to talk about impact accounting, impact measurement. That's not easy. And not just what's visible on the top, but really what's mattering on the ground, what's making a change in the longer term. So we will always advocate for, again, the long-term stakeholder value creation, not just short-term shareholder value maximization.
Great.
Thank you, Beat.
Thank you, Beat. Maybe let's stay quickly within the realm of remuneration. Michael from Imbera, maybe you can say a few words, because maybe just a question to you: where do you see boards most often misjudge, investor expectations on executive remuneration, and how can better alignment between strategy, pay, and governance strengthen then the credibility?
I think the speaker before said already the two main or the most important topics about remuneration. It's about transparency. So you need to really make sure that ex ante it's very clear which KPIs you're using in your remuneration policy, so that the investors can ex post really understand what has been driving the remuneration. I think that's one big factor. The second one is pay for performance. I think that's, at least from an international institutional investor perspective, very important. It's not so much maybe from our Austrian, German, Switzerland region perspective. Some remuneration might be quite high from the public awareness, but from institutional shareholders internationally, that's fine as long as the performance is going along. No? So it's really pay for performance. That's very, very important. But I would rather try to make an outlook, because I said we are in business intelligence, and so to say we want always to understand who are your stakeholders and how are they taking their decisions. I think that's the very basic for every use case or every question you are seeing in your business. And to a certain extent, we have also to say that the proxy advisors had a huge influence about at least the vote in the AGM from institutional investors on remuneration in the past. And we think there is at least a change is coming, and it's difficult even for me to say that, but Mr. Trump signed an order which is called Protecting American Investors Against Political Influenced also proxy advisors. That's the name of the order, not exactly, but right, roughly. And that was signed at the end of 2025. So we would expect going forward, and we already see the first signs of that the huge institutional investors, JP Morgan Asset Management, somebody like this, that they are starting to be a bit more, they start to do their own homework, or to take their own homework more seriously. So you will see a more diversified opinion from institutional investors going forward if they look at your AGM, and I think that's where remuneration always has a big part, your remuneration policy, and then the remuneration report and the outcome.
Thank you, Michael.
Thank you, Michael.
Thank you.
Good, so then we continue with a question to Wolfgang. Once listed, companies operate under permanent market scrutiny, not just at reporting dates. So where do newly listed companies most often underestimate the realities of being public, and which post-IPO decisions create the greatest legal and capital markets risk?
Yes, in our experience, this has much to do with investor relations, corporate governance, and disclosure structures and processes. So yeah, let's look at a few examples. First one being public obligations, managing these obligations, for example, relating to ad hoc publicity, management transactions, disclosure of shareholdings, requires obviously the respective structures and processes, and more importantly, they also need to be known within the company. Not managing this properly, the resulting risk obviously is investigations and maybe also sanctions by SIX and also FINMA. Second, committees, working with newly established committees like an audit committee, sometimes is treated as a formality, but it is often underestimated how quickly a market notices if corporate governance structures are not properly in place, and the resulting risks can be loss of credibility, it can be investor backlash, but also obviously proxy advisor criticism. A third example, the half-yearly and yearly reporting cycle. So that you maybe remember from your IPO that maybe kind of a stress test, the first ones. And yeah, if, for example, the narrative diverges from the IPO equity story, then yeah, loss of trust is imminent. And maybe a last example, shareholder engagement. So if executives speak to shareholders in one-to-one meetings or give interviews to journals, obviously they always have to keep in mind not to selectively inform, not to unequal inform. That yeah, sounds easy, but it's sometimes difficult in a certain situation. And yeah, obviously this can also, the resulting risk is also loss of trust and yeah, especially by institutional investors. And yeah, I think all these examples show that it's not always easy to change mindset and actions from being a private company, from acting as a private company to a public company, and that's certainly a field many experts, advisors here can assist.
Fantastic. Great. Thank you. Maybe then also go to another law company, law firm, Yves Mauchle from Baker McKenzie. Staying with the topic of listed companies, where do boards of newly listed companies or listing ready companies most often focus too narrowly on formal legal compliance? And then also which governance or disclosure gaps tend to surface only once investor scrutiny, proxy advisors, and just market practice set then finally the benchmark for it.
Thank you. I would start by saying out that life at the stock exchange, as many of you know, starts with all those regulations and trainings prepared by us lawyers, right? And I would say almost all issuers in Switzerland and at SIX are good and compliant issuers. They take these frameworks seriously, all the organizational regulations, insider regulations, committee charters, ad hoc policies, management transaction reporting manuals, and everything we do for them. But there's a difference between a good and compliant issuer and a great issuer, and I would make 3 points. The first point, the issuer should have decision leadership and not just disclosure discipline. So let's say there is a strategic shift, the board decides it, after the decision has been taken, it's thrown over to the IR person. Maybe they briefly check with the lawyers on the wording and they put out a very weak narrative. The disclosure is an afterthought, not part of the decision. A great issuer handles the decision in a manner that already incorporates the narrative. They don't go to the market with a weak narrative because the market will make the worst of it. They think about why now, so what will we measure next, all those things, and they communicate it to the market. It's part of the decision, and the disclosure is not solely only an afterthought. The second point I would make is governance substance over form. You have a lot of things to tick the box to be compliant, but as he already said before, if the governance substance is weak, for instance, you put out an incentive plan, you disclose what is required, but the KPIs are vague, maybe there are some perverse incentives, you will have investors coming back and proxy advisors and potentially also attract activists. Great issuers don't do that. They think about it beforehand in their communication. And the third point I would like to make is great issuers have escalation discipline. So if the chairman calls the CFO on a Friday afternoon and he learns that probably the forecast of the CFO looks like it's not going to be within guidance, it's going to substantially deviate, then you have a Friday night scramble, you consult maybe with the lawyers, you issue a profit warning, and this in this Friday night scramble tends to have a very weak narrative. good issuers escalate these topics early. They are prepared and they think about how they communicate to the market. So the bottom line is a great issuer as opposed to only a compliant issuer has decision leadership and not just disclosure compliance. They have governance substance and not just tick the box governance form, and they have escalation discipline.
Fantastic. Thank you, Yves. Are there any questions from the audience for our experts? Yes, we have one. Just wait a second for the mic.
Yves, just on the final points that you mentioned, as an IRO, quite often you're not privy to those conversations that are taking place. And I think there's two challenges. Perhaps sometimes it's a reporting function, so quite often the IRO is reporting into the CFO, and perhaps communications into the CEO. And so what would your advice be to members here as to how to ensure that you are in that good issuer camp and that you are included in those conversations in advance so that you're avoiding that Friday night scramble as you described? Because it's a real problem, but it's not always as easy when you're further down in the priority.
You say it exactly right. It starts at the top. It's a board responsibility. And you have mentioned exactly the problem that the disclosure and the narrative is an afterthought after the decision. A good board will not do that. They will make it part of their decision process. And that means, from my point of view, already involving those IR persons that are then supposed to communicate, aligning the narrative with them, and anticipating events that could happen, such as a missed guidance, and be prepared for that. So that's a soft organizational difference, but it really starts at the top.
And is that the advice you give to boards?
Yes, I do. I try to brief the chairman exactly that way. Whether they listen is a different question.
Are there any further questions from the audience? If not, I would say I thank our experts for being here, for your opinion, and would call up the next panel then. Thank you. Super, Dankeschön. So our next panel is reporting on the scrutiny. So it's all about reporting, financial, ESG, and of course the price of credibility. Yes, thank you. Just go. I can give this to here. So put it in its eyes.
Yeah, so let's start with Luca Bianchi.
Yes.
Could you please present yourself?
Yes, we are a pleasure to be here. Thank you for the invitation. My name is Luca Bianchi. I'm the head of the banking and finance team of Keller Garar. Keller Garar is the largest law firm in Switzerland. We have 380 lawyers, more than 700 people in total, and offices in all major cities in Switzerland. We specialize in capital market transactions, equity and debt, and we also recently had another event about AI with 6R, and published a chapter on AI for investor relations. So all tech type of topics are also within our expertise. In terms of industries, we also are very strong in life sciences, real estate, tech, and primarily in the small and mid-cap segment. So a pleasure to be here. I'm looking forward to the discussion.
Thank you.
Manfredi, please.
Good morning, everyone. Manfredi Fiorillo, representing KPMG. I'm a senior manager in consulting. Senior manager somewhere in between, let's say, senior enough to be invited to events junior enough to still do work on projects, contrarily to partners perhaps. So I'm a sustainability advisor. I focus on a lot of different fields from circular economy to climate transition planning, climate risk and resilience, supply chain resilience, and so on. My team is a wonderful team, and we're trying to really transform, let's say, the sustainability ambitions and also obligations that companies have into value creation and value preservation initiatives. Most of you know KPMG already. I think we do work with most of you in one way or another. And obviously services span across audit, assurance, financial services, M&A, IPO readiness, and so on. And I think from my perspective, that's quite interesting because even if we look at an area like sustainability, we get to see all these different perspectives. So really being able to exchange on the legal requirements with our legal teams, we get to see the audited numbers, the reporting effects, but also the operational realities working with many of you on the ground. So I'd be very keen to also exchange these perspectives later at the lunch, perhaps.
Yeah, thanks for having me. DFG was founded, I had to calculate before, 27 years ago, where two PhD candidates out of Munich had the crazy idea that sustainability and CSR and now ESG or whatever term you want to take should be done properly, following a methodology, right? Should be, there should be a certain proof on that. It took quite a few years until the rest of the world came to the same conclusion, and now we're sitting here, right, where we see, let's say, the synergy between the old world and the new world, the financial world, and with all the new obligations and regulations. So we help listed companies, German Mittelstand down to SME, to cover all those topics, right? Because there's still, in many corporations, not enough personnel, not enough knowledge to really carry out all the necessary obligations, as we heard more often today, to do the reporting, to do the calculations on the carbon footprint, to set climate targets, to work on the CSRD requirements, and so on and so forth. I joined 22 years ago, so quite young to the company here, as the first employee. And we have also the benefit really to support with many of the initiatives we make, like Science-Based Target, like EcoVadis framework, like CDP and others. The large corporations, the OEMs, right, who want to get the data from the supply chain, who want to verify the product carbon footprint, who want to verify the targets, as well as the smaller companies to really have to fulfill those requirements in a certain way.
Hello everyone, my name is Marco Hafner. I'm a director with PwC, representing PwC today. We are very happy to be a trusted provider for the SIX, and I want to give just very brief background on PwC in Switzerland. We have around 3,600 employees in Switzerland and operate through 13 different offices. For us, very important, obviously, also to have a local footprint in the various regions. We offer a wide range of services, and I hope some of you had the great pleasure to work with us already. We obviously work with our clients on an audit or assurance capacity, on the consulting side, and also on the tax and legal side. In my daily business, I'm on the finance transformation platform. We support our clients on a wide range of finance consulting services, whether it's in a deal or non-deal context. And we really want to be a strong business partner and want to help our clients to navigate particularly financial reporting and non-financial reporting complexities. So great to be here today.
My name is Fabio Negro. I'm the CEO of MDD. We are a Swiss software company based here in Zurich. 25 years experience in corporate reporting, financial, non-financial reporting. With our single source of truth concept, meaning all data at one place, we enable companies to produce and publish the reports at the same time, meaning companies can publish a PDF report, an HTML report, or an XBRL report We also have over 15 years of experience in machine-readable reporting, meaning XBRL is, we're the first company in Europe to produce XBRL over 15 years ago. And yeah, I'm happy to be here and happy to be a trusted partner.
Hi everyone, Dominic Lüdi, my name. I'm the Chief Growth Officer at Carbon Future. Carbon Future is about carbon removal you can trust. Carbon removal meaning how can we take CO2 out of the atmosphere or the biosphere and pack it away for good, so hundreds of years. So we're not focusing on forests, we're focusing on technologies like biochar, bioenergy with carbon capture and storage, DAC, so that we pack it into the long carbon cycle again. And the you can trust was kind of like, how can we go beyond the due diligence report or believe me? Like, how do we build it systematically? So that means tracking the carbon in the real world from the biomass source to the facilities that produce it, to restoring it rightly to a verifier, so that you can follow that full path, and at the same time also the legal title, because you don't want to give it up somewhere on the way, and when you purchase the resulting removal credit, it's actually not yours. That convenience is at the fingertip of buyers, and that they're looking for a solution to meet their net zero targets. Yes, you need to reduce. We focus on how do you build up the removal path, and there we work with net zero clients like, be it Swiss Life, Swiss Re, SIX in a Swiss context, but also internationally, Microsoft, Boeing, ABN AMRO. Basically, whoever needs a solution to get to net zero, with removal included. We're Zurich based, we're internationally active, and happy to be here today.
Thank you all. Yeah, maybe we start the question round again with some context. So yeah, maybe we can just start with Carbon Future. Investors and regulators are shifting focus from carbon volumes to data integrity. Why is carbon data credibility becoming more important than carbon volume? And how can companies be ready for the scrutiny they face?
I think in the end goes like, if I buy a ton, it needs to be a ton. I don't want to be negatively surprised because that's bad for me. That's bad if someone else touches it. So like, I want to, if I'm already taking measures in what you could call a collective action problem that is put onto companies before regulation hits, then I want to be sure that what I'm buying holds the water. And in that sense, it's like you have a couple of approaches that you can quantify, that you can track, that you can make sure it's transparent, and do that in a way that as a sustainability professional, where that's sustainability, that's climate, that's carbon removal, I don't have time for this. So I want to be able to have a system that does that for me, that makes it credible, that I can actually expose to an auditor and it's clear, and bring that into the market. We've seen has a lot of value in terms of just, there's an answer to trust, and there's a convenience acknowledging that I have other things to do.
Fantastic. Maybe just stick quickly with this ESG topic. One question to you, Wolfgang. Maybe just grab the mic very quickly. So ESG regulation still has to, be applied, and where do you see that companies struggle the most when they are turning this ESG regulation into the actual operational reporting? And what breaks down between strategy and execution?
The funny thing is, there is almost nothing new what we talk about today, right? The enforcing frameworks are now kind of new, but how to do things, how to properly calculate a carbon footprint, how to set the climate target, how to do whatever, right, is out there for in many cases more than 20 years. But now we are forced to really suddenly do it because someone is watching, right? And someone specifically looks at the data. Specifically when we talk about going from, let's say, the sheer will in the strategy to operations, first and foremost, the human is important, right? There are many people within your companies who already taking care, who already have the requests, who already make up data, make up things. So you have to really explain what this is all about. What is this new acronym we have to follow, right? I mean, if you look at also at the plans of the European Union and other states, right, there is more and more and more to come. So it gets more complicated, and you have really to explain your stakeholders, internal and externally, what this is all about. Secondly, data, right? Of course, everyone thinks now with AI, all the data is there, super easy, right? And there should be this one magic system in ESG which, you know, combines everything. As if any one company would have one system to run anything, right? It's hundreds and thousands of people and systems taking care, and you don't, as a company, have, let's say, huge interest to really have all your transactional data being out there published for all of your stakeholders, right? That's also a risk. That's why you have to look at those models, and you have to make sure that you have current data blocks where you can do all the reporting, because one thing is clear, this will not stay like it is. It will get even more complicated depending on industry, depending on countries, and so on and so forth. So this is really important. And number three, it's you know, the involvement specifically of your supply chain, of your customers, of your suppliers, to really get proper data and to really essentially change something, right? It's not, as we heard many times, not ticking a box. It's really about, you know, changing, right? What is moving the needle? That's very important. This is where still most of the companies are challenging with.
Thank you, Wolfgang.
Yeah, so we already heard that net zero commitments are now assessed on execution, credibility, and not ambition. So, Manfredi, a question to you. Why do so many net zero roadmaps fail in practice? And where do companies systematically overestimate their readiness?
I think it's a very actual question. There's a set of, I would say, external drivers playing in favor. I think, you know, seeing a second energy crisis in 5 years is kind of making the case again for making our own energy at home, whether it's renewables or nuclear and so on. There's other external factors that, of course, do not play in favor. If we look at, obviously, geopolitical crisis in general, or sometimes even a bit of, let's say, anti-science sentiment. So I think there's that at play. Internally, the case is a bit different, and I would say it's easy to say, well, probably early to say if you know, net zero roadmaps are failing or not, because in the end it's a long-term game. But what ultimately provides credibility to net zero roadmaps is boiled down to one thing, and that's the existence of a climate transition plan, essentially. I often compare, you know, most of net zero targets out there a bit as a New Year resolution, where you know, you have sometimes a very fancy goal, beautifully communicated, but substantially there's nothing in the back. And we see it often that many corporates, let's say, submit to net zero without actually having done a bit of homework behind, whether it's costing net zero, seeing the feasibility of it, or building a founded transition plan. There's many definitions and frameworks around, you know, what a CTP should entail, but it's usually the same elements: governance and remuneration, touched earlier. Obviously, policies, processes, lists of all the decarbonization actions that need to occur, financial planning, internal carbon pricing, engagement strategies, product strategies. So it's really the whole package. And in essence, you know, a transition plan is, you know, answering one fundamental question. So is how your company is going to survive in a 1.5C future. And that's where the key is. So I think there is a lot of companies that underestimate, on one end, the extent of the exercise, because it's an exercise that is indeed a transformation strategy that needs to be involving all the stakeholders within a company and needs to be embedded in the company. But also underestimating what this transition actually and transformation actually entails. And net zero means reducing emissions by, I would say, at least 90%. So you have to look into every single activity that a business is doing. You have to turn every stone. You have to see if an activity can be continued, changed, perhaps phased out at a given point, and in quite a lot of diligence. So I think there's a few hurdles down the line, and also transition plan should also be able to cover, let's say, the next 20, 30 years. And we know that usually planning and strategy cycles don't go beyond 3 to 5 years. So there's already, I would say, a hurdle to overcome there. So there's quite a lot. But I think in essence, what it boils down to, and also, you know, back to the point of credibility, also to shareholders, to external stakeholders. I think, you know, the general narrative that a net zero commitment is going to provide brand value is outdated. Fancy slides with the usual hockey stick and the net zero roadmap also don't fly anymore. So ultimately, and luckily also because of regulatory pushes, the climate transition plan is probably, the key proof point to show that you mean business. And it's actually the right foundation to be setting today, right? To enable that ambition and reaching that net zero in the future.
Thank you, Manfredi. Maybe we go over to Fabio Negro from MDD very quickly, just to maybe you can say, because these transition plans, everything needs a lot of data, managing data. So with these increasing regulatory requirements, why is now a single integrated reporting platform essential for both the financial and the non-financial reporting?
Yes, the reporting software can act as a hub, meaning all data is in one place and all the stakeholders can work within this hub, meaning creative agencies, translation agencies, auditors, communication agencies. That's one part, and being compliant and ready to publish. In this case, we're seeing the climate report has to be in a machine-readable format at some point, also in Switzerland. So the XBRL part can only be produced by software. And then the third part is the process security and the data security. So if you have everything in one secure place and don't send out emails to your CEO, and then the process is pretty much secure.
Thank you.
Thank you. Yeah, so we heard integrated reporting is increasingly expected, but rarely achieved convincingly. So question to you, Marco. Where do companies fail to connect financial and sustainability reporting, and what credibility risks does this fragmentation create?
So what we really see still at a lot of our clients or in discussions that we're having is that financial reporting and sustainability reporting is really performed in two different ecosystems. There are different teams involved, different systems, different timelines, and also different controls and governance structures. And at the end, also the audience is to some extent eventually, or to some extent different. Now, one reason for this is, or the disconnect is probably that there is still a maturity gap. Financial reporting has been around for many years and has been refined over decades. Companies have established very robust processes, and the standards are robust and out there for a long time. And when we then look at sustainability reporting, it's still evolving, and now organizations really focus on becoming much more efficient and effective in collecting sustainability information and also reaching a certain data quality and have processes around this in place and controls. Now, another area where we see a disconnect is that sometimes the financial reporting doesn't speak to the sustainability reporting or vice versa. We see that there are sometimes questions raised around how, for example, sustainability targets reconcile back to the financial statements or financial statement line items, and what is the financial impact of certain sustainability strategies and risks. The question there is also how are sustainability risks and transition risks reflected in budgets, in asset values, impairment tests, and in other areas. Now, what are the risks of this? It's really, if there is a disconnect between financial reporting and sustainability reporting, this can erode investor trust or the trust by rating agencies and regulators. This can increase greenwashing accusations and also expose an organization to additional legal risks. So to sum it up, really, I think we really recommend to integrate sustainability reporting and financial reporting much more, and also integrate it into the value communication of a company. And I think with this, that there can be much more emphasis also on the sustainability reporting.
Fantastic, thank you, Marco. Now, a question to Luca Bianchi from Kellerhals about a different type of reporting. So about the disclosure that companies do, which disclosure mistakes most often trigger then the sanctions, the much feared sanctions, and why do issuers keep repeating them in the end, despite clear regulatory guidance?
So there's many mistakes that can be made, but predominantly it's ad hoc publicity. You can see that on the list of the sanctions or the decisions about the sanctions on the 6 web page. And there, I mean, although ad hoc publicity is a science per se, there's 6 guidelines and commentary, etc., to follow that. I think the mistakes happen more for cultural reasons or also for process reasons. So for companies of some industries, just an example, but real estate, for example, have a totally different compliance culture than, let's say, a Swiss bank. You can really feel the difference as an external advisor. They think legal and compliance is just costs, no return of it, and it's just not a priority. The resources are not sufficient in those departments. And then those departments may also feel some type of pressure from other departments. And then mistakes happen, but how to change that, I don't know. I mean, I can tell a company, put more resources in your legal department all day. If it's not a priority, it isn't. I think there we just need a culture change to understand we're now a listed company. We have a limited regulation with the 6th regulation, and we need to have the people and processes in place to ensure that no mistakes happen in that area.
Great. Thank you very much. Are there any questions from the audience? If not, I would thank the panelists, right? Thank you for your expertise. Now we have the next panel, which is about value storytelling, financial communications that strengthen credibility. May I ask the speakers to come up? Nein, mich kannst du meinen, dann stehe ich. Ja, du kannst da abhocken. Wir haben gerade beide nebeneinander. Dann kannst du abhocken, von mir aus nicht willst.
Good. Well, yeah, then let's start with the presentations. Maybe Petra?
Yes.
As you have the mic.
Hello, good morning, everybody. We are here together as a team today. So David Hauser is senior advisor. I'm the founder and managing partner of the company. My name is Petra Nix. So we are a consultancy and design agency for corporate, financial, and ESG communication and reporting. We focus on strategic consulting, efficient project management, and clear storytelling and on-point implementation of corporate communication and corporate reporting. For more than 25 years, we guide listed companies through all the jungles of regulation and compliance. And our main mission is to make the requirements, the regulation requirements clear, bring it into good communication, value-enhancing communication. So what we stand for is it's for reliability, quality, and responsiveness. what our clients see us as a boutique for good reason. We work with senior managers, not with juniors. We try to find a pragmatic approach with our clients, and we always try to find the best solution. We are very proud to be service provider of that new network, and we are really happy that we have so many experts on capital markets here. The question we get from you, the next round will be answered by David.
Thank you. I'll just shortly introduce myself. Hello from my side. My name is David Hauser. I'm a senior advisor and I support clients in strategic communication, corporate reporting, and in particular also sustainability reporting. And I help them to lift their reporting to the next level. Thank you.
Fantastic. Thank you.
Morning, everyone. My name is Valentin Ramos. I'm sales director for Emperor. I'm on my own today, no support. For those of you who don't know Emperor yet, we are a leading employee-owned corporate communication agency with around 350 employees across 7 offices, originally from Great Britain, but our clients are all over the world, from different sectors, different sizes as well, although we tend to focus on many global companies listed on various stock exchanges, the Euronext, Nasdaq, LSE, and of course SIX, where we have a lot of clients. I guess what makes us a little bit different from our competitors, although there's a lot of things which are similar to Petronics, we are really fully integrated. That means we should have the capacity to help you with pretty much every aspect of your corporate communications. That would include financial reporting, of course, sustainability strategy, sustainability reporting, branding, digital, employee engagement, and an investor presentation. So kind of a broad range. And in fact, this is why companies come to us, or sometimes we go to them, and we often work with them. We start with financial reporting and ended up working with them for sustainability and branding, because it kind of makes sense to have a bigger look at the bigger picture. So I guess really our role is to help them communicate, engage with their stakeholders, all the stakeholders, both internal and external, and making sure they have a coherent and consistent communication across all channels and format.
Thank you, Valentin.
I'm next. Thank you. Great to be here. Thank you for the invitation. So my name is Liron. I head up the client relations and IR solutions at IDX. IDX, we are a global digital communication company. I'm based in London, which this is where our headquarters is, but we have offices in the US, in New York, in Phoenix, Arizona, in the Nordics, in Sweden, and Finland, and India. And I'm actually really happy to share that we literally just opened our office in Switzerland, in Geneva. So my new colleagues, because of wonderful colleagues, are here with me today. What we do essentially, we help listed companies communicate better with different stakeholders. That could be investors, employees, etc. How we do it? We do it by building the corporate and IR website, IR tools and feeds, webcasting, design, anything to do from a digital aspect and corporate communication. We have people, everything is in-house as well, so we have people that have loads of experience in that, and we are very happy to serve our companies and to work with different exchanges, including SIX. So again, thank you very much, and we are very happy to be here as a trusted provider.
Thank you.
Good morning, everyone. Thank you for the invitation. Happy to be here. My name is Pascal Honold. I'm proudly representing here Wenger Fierli Legal and Tax. We are a full-service law firm, Swiss-based, Zurich-based law firm, proudly serving the Swiss clientele, entrepreneurial, deeply rooted in the entrepreneurial landscape for over 50 years here in Switzerland. We are, as I said, a full-service law firm with roughly 150 staff and over 100 professionals, proudly advising our clients in all variety of legal sectors when it comes to listed companies. I'm representing here the capital market and M&A team, Zurich-based, and have here from corporate matters through M&A transactions, as well as equity and that transaction we are advising the full variety. Thank you very much. Happy to be here.
Good morning. Also, warm welcome from my side. My name is Annette Weber. I'm partner at Advestra. Advestra was founded in 2020 by a passionate team of experienced lawyers. We focus on capital markets, M&A, financing, but also corporate law, including listed companies and securities laws, and corporate governance in general. We also help banks and insurance companies on their regulatory issues and also have a tax team. Recently, we also added a dispute resolution team. I hope you don't need it, but nevertheless, sometimes it can also be helpful. We have a strong footprint, in particular in the ECM, so the market, in the equity capital market in Switzerland, but also advise issuers and banks on bond and other debt transactions. A recent example of our ECM practice includes the IPOs of SMG, Biovasis, and also HD5.
Thank you, Annette. My name is Martin Meyer-Pfister. I'm a partner at IRF, one of 6. My colleague Oliver Seifried is sitting in the back, so if you would like to talk with him rather than with me, that's fine too. My company, I'm a founder of the company, is existing since roughly 20 years. First number 20 years, a bit more than 20 actually. We are roughly 20 employees, so a bit less actually. We have advised over time for approximately 30 IPOs. Quite a number of former IPO clients are sitting in the room. Happy to see you. Then we have approximately 40 clients as retained clients. Roughly half of them have a 6 listing, and we are advising them typically in 2 areas. One is PR, communications and media, and the other is capital markets, IR, and special projects, as I said, transactions, also M&A, but also the normal financial calendar work. And thank you for being part of the team.
Fantastic, great.
Thank you. Yeah, so then let's start with the discussion. I have the first question for Liran. Digital touch points often form the first credibility impression for investors. So where do corporate websites fail as credibility instruments, and what separates trusted IR sites from generic communication platforms?
Thanks, Vera. Excellent question. I can talk hours about it, but I won't. So I'll try to make it quick. We heard a lot about legal and compliance before, and it's super important, yes. However, the digital aspect is becoming a lot more relevant nowadays, especially with AI. If you have content on your website, for example, that is not very clear, it's heavy or PDF heavy as well, simply investors and AI, any different LLMs, will lose confidence in you. We have 2 audiences right now for websites. We have humans and we have machine, AI. And they work together, by the way, so it's not separate. If we don't realize how we can make it work and how we can actually, people that comes from different LLMs to your website, what they're looking for, because essentially they're looking to verify it to what they have already saw and read before. So this has become a lot more important. We host a lot of websites and we see a lot of traffic. About 35% of traffic nowadays come from different LLMs. And they come to verify, and that figure will grow, actually. Last month I was on a panel, and was another guy sat next to me, and he is one of the partners of a big hedge fund in the US. And he said to a room full of IROs that his firm's doing 100% research through AI. Not 50, not 60, 100%. And that actually clicked a lot in that room to show what we can actually need to do because in the end, if we're not doing it, we're losing our equity story. And this is something that's becoming a lot more important. And good companies, whereas the ones that actually understand it and realize it and start updating it for people, but also for machines. Thank you.
Thank you, Liran.
Thank you. Next question goes to Valentin from Emperor. Staying with the reporting. So, I mean, reporting design is super important as well. Just the eye, just it's very important for the eye, just in general. So, where does reporting design help clarity, and where does it start to dilute or distract actually from the substance?
Another good question. I guess it's the role of design. And I think it is a very important role of design in reporting, probably even more so now, considering the complexity of the content in report, whether it is ESG or financial content. So I guess the first role of the design is first and foremost to work with the content to make it easy to find and make it easy to understand. So we at Emperor, we always think about the different types of audiences that we have. And if you think about reporting, they are really diverse. So you have the one that might look at the report for kind of 30 seconds, others for 3 minutes, and others, probably a very few of us, for 30 minutes or more. So it's very important to cater for all those audiences. So this is where things such as the right typography, the right layout, navigational elements that come into play. So the idea here is really to make sure you pull out the most relevant and the most important information for all those type of audiences, and you make it kind of accessible. And then accessibility is another very important point when it comes to reporting. And I'm talking here about accessibility in a broad sense of term, which is essentially making sure that everyone has the chance to read and understand the report. So even those with specific disabilities. So we always think about disability, always think about accessibility first, and we talk about accessibility by design. So here there's things such as making sure you don't have text on images, you have kind of the right color contrast, etc. So looking at how your report can be understood by everyone. So that's very important. It's becoming more and more important with a lot of different standards coming into play. So I guess the other thing is about your brand. So the design, when used wisely, can kind of help you bring your brand to life. So if I give you the example of a Swiss client, believe it or not, they make chocolates. They just recently refreshed their brand, and their integrated report was the first major document that was released. So that was a very good way to really give life to the new brand and present it to various stakeholders. I think another thing that a design can do when done wisely, it helps you simplify very complex information. So think about your business model, think about your strategy or your risk in reporting. Sometimes a right infographic or a good diagram will say far more than 1,000 words, for example. And then lastly, and probably the most important, is good creativity, good design. It can generate ideas inspired from content and make it a theme for the document. So it makes it far more engaging for all your audiences. That's it. Thank you.
Thank you, Valentine. Thank you. So Martin, many reputational risk or crisis start with communication choices rather than underlying performance. So which reputational risks do companies most often create themselves through financial communication?
Yeah, actually I think often it's a combination of the two you're mentioning. Performance is not good and the communication is neither. But let me pick one. One would be financial guidance. Roughly 90% of the top 100 companies at the SIX exchange are providing some sort of financial guidance. Often it's maybe too vague. It can also be too specific. It can be too optimistic. And of course, the question is how we provide a meaningful financial guidance over time. And that's a key topic we discuss with our clients, what KPIs to select, what timeframes to select, how to communicate it, etc. You all know the famous concept of overpromising and under-delivering, not just in IPOs, but also over time. And that, of course, has a serious reputational impact. It also has an impact once you miss the guidance, how you do that. Often, again, it's too optimistic. Even the earnings miss is too optimistic, which is leading to a series of revised guidance, which is hurting reputation of management significantly. There are others, but we are all waiting for lunch, and there are a few more speakers to come. So over to you.
Thank you. Speaking of all these challenges, I do have a question now to Annette from Advestra. So the IPO is a milestone, right? But rarely the hardest phase for management teams. Which challenges surprise companies most in the years after the IPO?
Yeah, thank you. That's a good question. I think like many IPO candidates, or once they have IPO, they think like they have now reached a peak, and often it's rather the base camp, and you start a new journey. And you start a new journey without all the advisors which you had in the past. So where we see in particular struggles in the first year, for example, with the financial reporting, you need to really do that the first time alone. I think that's one of the key points in the first instance. But also down the road, we see there are many hurdles or many surprises, but I would like to pick a few and also kind of already relay what was said. One is the stakeholders. You have a different set of stakeholders which you need to interact and kind of meet their expectations. You don't only have shareholders which are interested in the long-term value and understand, for example, your transition goals for 2050, but you have also shareholders which are only interested in the short term and would like to see what you have to report in for example, for the next quarter or for the next half year. And that's kind of an ongoing challenge, which doesn't happen only kind of twice a year when you report and issue your financial statements, but also during the year. And so that's also kind of a real distinction between a privately held company and a public held company. And the last thing which I would like to mention is and which kind of already mentioned by other panelists already, is the disclosure. It is key to communicate in an effective way, not to overpromise, as you said, because if you don't deliver what you have said, it seems to be that you have failed your targets. A correction is also, as always, an implication of your credibility. But we see also struggles in communication and in stringency over the different topics. It was also mentioned ESG versus financial statements. So there we also see that teams do not fully align or communicate between the different teams. That's in a nutshell, I believe, and the most important parts. Of course, I could go on, but I suggest to do that at the lunch.
Okay, thank you.
Good. Sticking with financial communication, Pascal, which communication approaches, for example, pre-close calls that are very common, create the highest legal risk, and where do issuers tend to push too far there?
Thank you, Vera, for the question. Very much important and actual. As we see in our recent experience with a couple of issuers, in my view, the highest risk lies definitely when it comes to kind of selective information in terms of, or in the sense of being not yet published or being just distributed to some of the investors or some of the stakeholders. It's certainly advisable that you have a key communication strategic in place internally, that you know what can be said by which executive or which communication officer at what time in what place. And obviously a wrong word said at the wrong time could be very much with a legal consequence. I don't have to elaborate here in details. As a rule of thumb, although there is no, let's say, catch-all answer to your question, but as a rule of thumb is if it comes to a pre-close communication, whatever kind of, it's not prohibited, obviously, but then stick to information which are already public or can be delivered without any risk of price impact for the issuer and investors. So reach out to your legal and finance team first. Be prepared also when it comes to Q&A. Do not go too far because we see management are keen to deliver a message, and the message is always positive, and that's sometimes not advisable from a legal or compliance part of view. Thank you.
Thank you.
Thank you, Pascal. Circling back to the topic of corporate publishing, David from Hauser from Petranix, where does corporate publishing cross the line from informative to over-engineered? And how does that undermine the credibility of the company?
Thank you very much. This is a great question, which we often discuss with our clients. And to make a start with, in many reports, over-engineering starts with good intention. You want to be transparent, you want to have a complete report, and you want to be compliant. However, at a certain point with over-engineering, you lose the reader, and it just starts ticking internal checklists. A clear sign is when a report tries to answer every possible question, which is not possible. And yes, from our experience, this really undermines credibility, and in 3 ways. So the first is you lose the reader. You create a distance when you over-engineer your report, and for the reader, it's hard to find the core story. Second, you weaken your narrative. If everything is equal important, then nothing is really important, so it's always, you lose the reader again. And third, it's you weaken your accountability. So if you don't have clear priority in your reporting, the reader cannot read for what the company stands for. So credible corporate reporting, in our view, is that you really explain what impacts the company, how does the company handle these impacts, and what is the value for its stakeholders.
Fantastic. Thank you, David.
Thank you, David. Any questions from the audience?
Yeah, any questions for the audience? If not, I would like to thank our speakers for coming, and I will call up the next panel. Around.
So again, a very different topic, modern investor relations. So maybe we start again with the intro round.
Yes, keep it short, 1 minute each.
Yes.
I think people are getting hungry now. And just present yourself very quickly, starting with you.
Thank you. My name is Alex Nikitin. I'm a partner at Valdevis. Been heading the corporate transaction team for almost 8 years. Do obviously a lot of transactions, including capital market, but my specialty, which has developed for the last few years, is really advising the board in corporate crisis.
Hello, my name is Thomas Palmer. I'm a partner at Dynamics Group. We are an advisory firm for capital market communications. So we heard before during the keynote that the capital markets are increasingly complex. We help boards, management teams, IR officers to navigate this complex area, providing the whole service that is needed for investor relations and also transactions. So we do ongoing investor relations. We do transactions such as IPOs, capital increases, M&A. The Sentiel transaction has been mentioned by Yves before, where Baker McKenzie covered the legal side, we covered the communication side. We have 5 offices: Zurich, Bern, Basel, Lausanne, Geneva. Now you might ask why we are in Bern, for example, when doing capital market communication, but that's why we also cover classic corporate communications, media relations, and also public affairs. Our company is managed by 21 partners, so a senior organization with a lot of experience, large network. Yeah, that's about it. And some of you might also know us as the company behind Investora, the largest small and mid-cap conference organized by us every September for 2 days. Listed companies come together to present themselves to investors, and SIX and also other companies represented today are our valued partners at Investora.
Thank you very much. Good morning, everyone. Attila Kosa. I'm heading equity capital markets at Baader Helvea. I'm now in the business for over 16 years with previous stations at an Austrian, German, US investment banks. And glad to be here. So the services that we provide to corporates is on the one hand to help to raise fresh equity through capital increases or supporting shareholders to do structured placement of larger stakes, for instance. But we do also organize roadshows for companies to meet international investors and Swiss investors. We are just in 3 weeks' time, we are going to have our Swiss reverse roadshow with 12 of listed companies in Switzerland, as well as we are hosting one of the largest Swiss investor conferences in Bad Ragaz, beginning of the year with over 80 listed companies. And in addition, we are also providing company research. So at the moment, we are around 90 listed Swiss companies out of 600 in Europe, with a pool of 40 research analysts. And last but not least, we have a full setup in Switzerland with an office in Zurich in Freigutstrasse, with a full setup of traders, sales, research analysts, back office, everything that you need to trade equities. Thank you very much.
Thank you.
Thank you.
Good morning. I'm Javier Rivas, and I'm developing 10 Value together with my business partner, Alexandra. With 10 Value is a platform built for value creators. You know, Airbnb shows houses, Netflix shows movies. So 10 Value is built only for value creators. We're only focused on companies with good business models, good management teams, and attractive prices. It's very important to bear in mind that we do not outsource the work of investor relations. We simplify and distribute information to professional investors across Europe. You know, there are thousands of listed companies in Europe. An asset management company with 3-4 analysts, they can cover up to 80, 90 companies. So there's a gap there in the market. We started working with small Spanish companies who could gain market share. We're focused on Swiss small caps now. We started working with Swiss companies too. And that's our work. So we do not outsource the work of the investor relations, but we help them get more interactions with investors and increase their visibility, especially the market volume, and speak to more investors, and that's the work we do. And thank you. I feel very grateful to be here, and thank you, Vera and the team, for inviting us.
Thank you.
Thank you.
Rolf Meilermann, happy to be here. I'm from Helvetische Bank. Helvetische Bank is an employee-owned, fully integrated private and investment bank. And within investment banking, corporate finance, the part which I'm heading, we do equity capital markets, debt capital market, and M&A. Within equity capital market, we are number 3 among the Swiss houses. in terms of number of transactions, and do the entire spectrum of ECM transactions, IPO, rights issues, corporate actions, everything. Within debt capital markets, we are very much focused on smaller bonds from 20 to 100 million, which we fully underwrite prior to launch. No stringent financial covenants, no collateral. In M&A, we do public M&A, public takeover offers and private transaction, and then we have all the services like debt advisory. To my person, I'm now over 30 years in investment banking and corporate finance in Zurich and London, and I'm heading the corporate finance practice of Helvetische Bank now for roughly 12 years. Thank you.
Good morning, everyone. My name is Richard Race-Clark. I was a co-founder of a small company called CMI2I. I'm pleased to say we were acquired by Computershare about 18 months ago. It's been going very well. We now sit within the Issuer Services division within Computershare. Computershare has a global presence across issuer services, corporate trust services, and employee share plans. Within issuer services and here locally, we work with companies of all sizes across everything from share registry, AGM support, corporate governance advisory, M&A, proxy solicitation, tender solicitation, and most importantly, from my point of view, capital markets intelligence, which includes shareholder identification, bondholder identification. And thank you.
Fantastic, thank you. Maybe let's go over to the questions again. 1 minute each, maybe.
Yeah, maybe we start with Rolf. Debt investors apply a fundamentally different risk logic than equity investors. So where do issuers most often misjudge what bond and debt investors really care about, and how does this affect pricing and access to capital?
Yes, that's all about the question, what is an attractive investment case and what is a solid bond story. Equity case, investment case, there it is all about upside. So because shareholders profit from increasing share prices, for instance, a high return on equity is important, is key. Also, perhaps if you fund additional growth with additional debt, that can be very attractive. On the other side, robust debt story is all about downside protection, because if a company performs great, the bondholder does not really benefit from it. If the company performs moderately, same thing. If a company performs badly, then his investment is at risk. That's why downside protection is much more important. So a solid equity base, for instance, is prioritized over a high return on equity. You have, of course, factors like strong cash flows, which are important for both a strong or a successful equity story and bond story. But the most single factor which is misjudged quite often is company growth. Because company growth, of course, is key for increasing share prices, equity story, but it also can incorporate quite some risk, which can be relatively bad for your bond story. Thank you.
Fantastic, thank you. Maybe let's go over to Attila Kosa from Baader Bank quickly. So capital flows into Swiss mid and small caps have become more selective, right? How have investor expectations toward Swiss mid and small caps changed?
Many thanks for this question. Let me start maybe with the view on over the last 5 years. So 5 years ago, during COVID, investors were very much focused on finding companies on a stock picking approach. High growth, margins or profitability was not so important. Many or some of those companies have not performed well or are already gone from the market. And the mind shift of investors has changed in that regard. Also, during the last 5 years, there has happened a lot on the markets. So there are 2 major wars going on. Interest rates have increased. And also, Trump is stress testing the capital markets on a monthly basis. So these are all components where investors are shifting their focus less on what are the companies able to grow into the markets and consolidate the markets and competition and so on, but more on the ability to generate cash flows. So the focus has shifted on KPIs like free cash flow generation, free cash flow conversion, but also leverage levels. So for instance, the Swiss capital market, companies tend to have low leverage levels, which is a key differentiating factor when comparing apples with apples. And also over the last years, especially US investors were distracted for many reasons and have divested from European equities. This has clearly changed, also due to valuation levels, but also due to the fact that international investors now understand better how companies are coping with the circumstances, and stock picking is back again. So, for instance, beginning of the year, we have been part of 2 IPOs, and we have seen a decent activity, a very good activity of international investors, those that told me over the last 3 years they are not going to participate in equity placements, they are not going to participate in IPOs. So they are back again, and we see a healthy equity inflow into European and Swiss equities. And I think this is a good sign. The areas, because you also mentioned it, I try to be very quick, just maybe 2 sentences. What investors are looking for at the moment, except apart from financial KPIs, is the mindset of C-level management of listed companies. So how are they coping with the circumstances that they are forced at the moment, like the tariffs last year? So how are they navigating their companies through the regulatory limitations, and also how are they aware of the risks that the companies are exposed to? And at the end of the day, and I think this is also what some of the previous speakers have alluded to, is investors are building trust with companies, and it's particularly important to under-promise and to over-deliver, and to keep this healthy relationship and trust with investors.
Thank you, Attila. Thank you. Well, let's continue with a question to Javier. Small caps typically suffer from limited analyst coverage and lower visibility compared to mid and large caps. So which types of investors are most inclined to invest in small caps, and how can listed small cap companies use modern IR strategies to better target and engage with them?
That's a very good question. So we spend most of our time speaking to European professional investors. We like that. And we've realized that there are certain categories of investors who are very interested in small and micro caps. For instance, some asset management companies do invest in small caps. Then some financial advisory firms also have flexibility and invest in equities directly. Some private banks, family offices, high net worth individuals. So those are the kind of investors we're very interested in. And as we interact and speak to them often, we help investor relations department to increase their interactions with these kind of investors. And so TenValue was launched around 2 years ago, and we've proven that we've been right in a high percentage of cases, for instance, and that makes investors to want to interact more with the platform, speak to us more often. I'll share some examples. So for instance, we started working with a company called Libertas 7. We normally work with companies with a market cap below 3,000 million euros, normally 1,700 approximately. We made an exception with this one. It was only 20 million at the time, and we said to the market that we believed that the real value was 150 million euros. The share price in a year and a half increased by 3 times. They substantially increased their number of interactions with investors. At Alaya Mining, we like the copper market. At the time, we still like it for the medium to long term. So the share price has doubled since then. Neinor Homes, the largest home developer in Spain, we started working with them. The market cap was 800 million euros. They announced a dividend plan of 600 million euros. And so they perform very well. There's a lack of supply, unfortunately, in Spain. And the share price now has more than doubled too. In Switzerland, in Plenia, Luca spent a good amount of time with us, explaining how he felt very positive about the investment case, why he believed that free cash flow was going to increase substantially. He was writing absolutely everything he explained to us. We're very happy working with him. And again, so the number of interactions with European professional investors also increased substantially and organically. So in summary, we think that over time, companies are going to realize that it's not just about communicating well and having good visibility, but also about answering to your question. So targeting the right audience, making sure that the information reaches them, and then that they can interact frequently with those investors and seeing which of them are interested. And as 10 Value, we can support the investor relations teams so that they do that and they can achieve their goals.
Thank you, Javier. Thomas from Dynamics. We grabbed the mic very quickly. Speaking of the communications to the investors, why does a weak equity story limit the IR effectiveness, even when financial performance is very solid?
Even when financial performance is very solid, that's because investors don't invest because of the financial performance only. They want to invest because of the mechanics behind the financial performance and of course the future performance. So the equity story helps them to get a framework to understand why the company was able to deliver these good results, and more importantly, whether it will be able to deliver such good results again in the future. At Dynamics Group, I must say we are really big fans of equity stories. Yes. We think it's core really for the positioning of a company in the market. It brings together the track record that shapes credibility, the current performance, and of course the future potential, addressing factors such as how the market will develop, how the market position of the companies, what the business model is, what the technology is, and how all these factors then translate into financial results. So to your question, what happens when, or why does it limit IR effectiveness? It's because when you don't have an equity story, you end up being reactive in IR with just explaining numbers instead of being strategic in shaping the reputation of the company, in building trust for the company. And yeah, it can then at the end, of course, the effect can be that the valuation is lower, the liquidity is lower, the volatility is higher, investor engagement is lower probably. So in a nutshell, for us, it's not a nice to have, it's a must have, an equity story, because yeah, without the story behind it, numbers are just numbers and don't translate in a convincing investment case.
Correct.
Thank you, Thomas. Well, yeah, then Alex, a question to you. Investor activism is becoming more targeted, coordinated, and legally sophisticated, actually. So how does a modern investor activism change the legal risk landscape for IR teams? And where do companies remain unprepared?
So, yes, indeed, the IR work has become more challenging in the context of shareholder activism. And that's in two dimensions. One is external interaction. There's much more scrutiny when you interact with investors, be it in writing or verbally. You have to make sure, apart from the legal framework, which was also already mentioned by Annette, it has to be, of course, no unequal treatment, ad hoc compliant, etc. But it also should be, consistent. It has to be robust. And activists, they know your weakness and they can easily benchmark. The second dimension is internal interaction. The IR team is much more demanded in connection with shareholder activism. Has become an important player in the company, need to interact very closely, efficiently with legal, board, management, media, internal, external, etc. The second part of your question, what remain the challenges or where do they remain unprepared is a question which I like because it already gives the answer. Remaining unprepared, that's the biggest challenge and the risk for companies in the context of shareholder activism. And we have seen a lot, by the way, as you know, recently, Swatch, etc., many others. You can train a lot. You can have a playbook, and you should train legal team, board, management, etc. But the weak spot is around the board. And this is not new. This has always been the case. And my favorite reference is, I'm sure you have seen the movie Wall Street with Michael Douglas, where he is the activist Gordon Gekko. And he is showing up at the shareholders meeting, and then there's this famous quote. Who remembers the quote? Greed, for the lack of a better word, is good. That's the famous quote. It hasn't changed the philosophy in the US, by the way. And you can see the board, white man, gray, old, shocked, passive, absolutely unprepared. Now, it's not that bad anymore in Switzerland, but still the board is very often, even though trained, it's not prepared because it's not aligned. The board is not aligned. And one reason why this is super difficult to achieve is because you cannot really simulate these cases. And I have my personal experience is 3 years ago, March 19, the merger of UBS and Credit Suisse. I was in the board of Credit Suisse. I cannot give you any insight, but you can see it is full stress with everyone in the room, legal, management, board, media, etc. And they were trained. And, we had the activists, Karin Keller-Sutter, FINMA, don't quote me, but these are situations which you cannot train, and that remains the weak spot.
Great, thank you.
Thank you. So then,
we have one more question to Richard from ComputerShare. So you have a focus also on shareholder identification, right, as a company?
Correct.
Why is shareholder identification or shareholder ID now a strategic IR capability? And what do companies lose when they don't do it?
Okay, so if you don't know who your shareholders are, I think you may have a problem, if I'm honest. There are, in my view, 3 key things that knowing who your shareholders are enables. The first of which is engagement on 2 levels. One is from a corporate access point of view, investor relations perspective, knowing who to be reaching at the fund managers and the analysts within the asset managers, and then also within the corporate governance field. So understanding who controls the vote and engaging with the vote decision makers. Second one is risk management, understanding if there's any risk in the shareholder base. Are there any activists building positions or any activist supporters, hedge funds, etc., who may cause issues? And then the third is the development of the investor relations strategy. So understanding who your shareholders are enables you to develop the strategy, understanding exactly where you want to go. Do you want to develop a shareholder base, for example? Now, if I come back to engagement, thinking about that a bit more, with engagement, it's very important to understand the ownership base, not just at the asset manager level, but also down to the fund level, because the funds themselves may control the voting rights, not the asset manager. When you go into this level of detail, you can actually work out where the votes sit, who has that control of the votes when it comes to the AGM and supporting the AGM. This is becoming ever more important, especially with the likes of pass-through voting, which some asset managers are deploying, and also with the development of stewardship teams, where they're splitting their active and passive investments into different teams. And this is really making a difference. We've already seen this year some of those teams voting differently within general meetings. So if you don't understand who your shareholders are, I think you're at a loss.
Fantastic. Thank you. Any questions from the audience? Yes, we have one question over there. Maybe just wait for the mic very quickly.
Hi, I'm Maria Grazia Leruccio from Luzerner Kantonalbank. I have a very simple question to you, Attila. Have you ever considered moving the Bader Helvea conference in January after the full year reporting season?
No, we haven't. I think the timing is quite nice because it's straight after the Christmas holiday season, and it's a nice start into the new year. I think when you look at the banking landscape, there is competition as well in terms of conferences. So therefore, the experience that we have made is that starting into the new year with a nice location, in Bad Ragaz, and meeting investors, international investors, it's a nice setup. There is not an ideal timing. Also, to wait for the annual figures to come out. Everybody's busy, right? So yeah. In a nutshell, we have made a good progress with keeping it in January, but happy to discuss.
Are there any further questions? If not, I thank the panelists for your contribution, and I call up the next panel.
The last one.
The last one. Ah, super. Maybe just pick one of these over there. Last but not least, we have a panel on the IR tech stack from shareholder base to digital engagement. I know everyone's hungry, but nevertheless, I would say we do the same spiel again. Everyone presents themselves quickly, 1 minute. Thank you.
Yeah, so thank you very much. Loris Dibiase is my name from EQS Group. I'm a service and a project manager at EQS Group, and as you may know, I've seen a lot of our clients here. We are a digital provider. We were based, so the headquarters is in Munich. It has been founded 26 years ago, and then nearly 10 years ago, they thought, okay, Swiss is a nice market. Let's start also in Switzerland, and here we are.
Perfect. Yeah, thank you very much. My name is Christian. I'm the co-founder of Equitech. I hope I would be the lunch caterer, but we do share books, share registrations, shareholder meetings, representing around about 100 plus clients in Switzerland from private and public listed companies. And that's basically the area we're focusing on. Thank you very much.
Hello, everyone. Great to be with you here all today. My name is Nicholas Shavkovsky. The first relief is that the six managed to spell my surname correctly, despite it being very complicated, so I thank you for that. That's the diligence you can expect from the exchange here. I lead sales and partnerships for Q4 across EMEA. For those of you that don't know Q4, we are an investor relations platform. We work across the entire IR lifecycle, and we do this with workflows, data, and AI. I will not go into all of these items because I know lunch is definitely expectant at this stage. Suffice it to say that we're growing very aggressively, organically and inorganically. We acquired a consensus management platform just 2 weeks ago. And I think the message that I'd put across today is there's huge opportunity for IR teams to work differently in the 21st century, whether it's through data or AI. We see a really big opportunity there, and I look forward to discussing that with any of you that are interested. Thank you.
Yeah, hello, my name is Arturo De Vigos. I'm the founder of De Vigos Engineering and Shareholder Services, and I'm impressed by you. I mean, your attention span is just amazing. I mean, all this energy on this stage. I mean, I I don't know how you even manage that. So I keep it very short. Shareholder services, management, and AGMs, we all know what this is about. And basically, to cut it really, really short, we just make sure that everything is up and running, because when we go to the election process of the AGM, it just has to work. And all the rest I can tell later.
Right, it seems that we are really eager for lunch here, so I'll try to keep it short as well. So my name is Martijn Ottenbach, Sales Manager Continental Europe here at Notified. This is technically still my first job, but I've been supporting our Swiss clients with the IR and PR communication challenges for more than 18 years now. Notified is one of the world's leading providers of digital IR and PR communications technology. We are part of Equinity since last year, so we're creating an end-to-end IR communications and shareholder engagement platform. Primary offices are in London, Paris, Stockholm, and since this month also in Frankfurt. So I'm joined by my colleague Martin Alamri, who is our sales director for DACH, to really emphasize our focus on the DACH market and region as well. What is it that we do? So over 25 years, we have been supporting issuers around the globe, managing their entire investor relations communications lifecycle. So we are that one platform that combines PR and IR disciplines all into a single platform. For IR, that means your earnings calls, earnings webcasts, IR websites, regulatory disclosures, earnings events, AGMs, CMDs. On the PR side, it means global media database, online and social media listening, press release distribution via our own Globe Newswire brand, reaching analysts, journalists, investors in 158 countries in 35 languages. And that scale matters because with our 10,000 clients, it means that we ensure our clients get a single point of contact, one platform, one login, one consensus message for IR and PR communications to get measurable impact, less operational friction, and a consistent messaging.
Thank you. Hello, everybody. My name is Carmen Veche Sanchez, and I'm from Chorus Call, Switzerland. I'm here with Tamara, and we will be pleased to also continue to speak during lunch. I will make it that shorter because everybody has, I'm sure, time. I want to have time for lunch. Chorus Call is based in Switzerland, and we also have offices around the world. Our main focus is to help our client, our listed companies, where they are looking for IR communication tools, as you were mentioning before, Michael, but give solutions, digital solutions, and moderated conference call all in one using webcast solution and web-based calls in order to make sure that the content, the message you want to send out, it's correct, and you focus on that, and we take care of the technical side, the technical aspect, the management of your event to make sure that everything will be working perfectly as you expect. For that, we have a great team of experts, 35 years working with IR companies and helping investor relations, media teams, and corporate communication teams. Thank you.
Thank you all. So then we go into the question round. So let's go to the AGMs. So Arturo, please. How are digital and hybrid AGMs reshaping shareholder expectations? And how can issuers turn this into an opportunity for greater accessibility and shareholder participation?
Yeah, this is a really hot topic. And I mean, when the legal framework changed, of course, we started with the development of the new platform to enable also virtual AGMs. And to cut it short here, it's a lot of work. Everything is new, and we have a lot of new things to learn. So do our clients and the shareholders. So we did already 12 virtual AGMs, purely virtual, and it's really amazing to see all this. But there's a long way also in the trust from the board because he takes new risks, of course, and all this has to be addressed. So, but our job is not to judge what is right, what is wrong, but we see now a really very interesting discussion whether the virtual format is the right one, or should something hybrid be envisioned, like in other countries in Europe, as we know, is more or less the rule. But all this is still ahead, and I think we're in the middle of this process, and it's very, very interesting.
Speaking of AGMs, Christian from Equitech, maybe. For effective shareholder engagement, where do outdated shareholder processes still limit this kind of engagement, and how can technology or your technology remove these barriers?
Yeah, thank you very much for that interesting question. I'm not sure about whether people are still alive, so I want to pose 3 advancements we could tackle on the process side. In my opinion, we still invite a lot of shareholders by postal mail. So who in the room, you still have maybe some hands, we are vivid, I don't have my clicking devices with me. Who is still inviting mostly shareholders by postal mail? Okay, wow. So one of the things is we still don't get the email addresses as a share registrar from the custodians, which is a huge limitation. We have a lot of private clients. If I tell them in the IPO Academy, hey, you don't have email addresses of your shareholders, they're looking like, okay, so how do we contact? So it's really one of the process inefficiencies, in my opinion. So we have a workaround. You can register as a shareholder. You can put your email into the system, but it's still a workaround. Second is in general on price data. Who of you knows whether a shareholder has a 40% gain or a 40% loss in his position on a shareholders meeting? Nobody. Okay, so what we are really lacking, and what I hear a lot from our clients, is we do not know what is my relationship to the shareholder and his relationship to the company. For me, it's like a cold call. I have no clue. So in that sense, if this is a wish list, what would be best would be that we get from the custodians as well the trading price information on buy and sell, so I have a better understanding on the position of my shareholder. Of course, and that leads to the third part, most positions are even not registered. So by default in Switzerland, I always have to explain that in comparison to other countries, shareholders do not get registered, which is a huge problem. We are mostly blindsided. So we can talk about shareholder meetings, great engagements, and everything if we know only half of our shareholder base, compared to your stocks, where we see like Palantir going crazy with retail investors. How can we keep up in Switzerland digital sovereignty? So we need to invest into this infrastructure. Thank you.
Thank you.
Thank you, Christian. Yeah, maybe we go on with Notify then. Digital IR channels are more crowded and more scrutinized than ever. What must digital communication platforms do to remain credible and relevant in modern investor relations?
Good question, and I think that the bar over the past years has fundamentally shifted, right? So for years, the role of a digital IR platform was basically distribution. Publish the results, make your regulatory filing accessible, host your webcast. At this point, investors and analysts are no longer looking, for the present. They expect it. It's the minimum. So what they're looking for is speed, quality, and more increasingly, intelligence as well. So for example, the notified platforms are purposely built around AI, enhancing AI visibility, helping AI, PR and IR teams ensure that their content is found, understood, and cited in a way where these AI tools create a narrative that you as a listed company are looking for. So what does credibility look like? And I'll keep it short, 3 points, but I'll shorten them a little bit. So in the end, it starts about trust infrastructure, right? So you, but also we operate in a heavily scrutinized, regulated environment, which means that the absolute basis of tools that you use should be enterprise-grade security, regulatory compliance, audit-ready data handling. So SOC 2 compliance is the absolute minimum. That should not be a feature. It should be the basis of the foundation of the platform that you use. Otherwise, you're going to get a very nervous IR team, a very nervous legal counsel team as well. The second part, and that's really where the narrative and the discussion has shifted over the last 18 months, is the narrative reach in the age of AI. This is about IR professionals asking, where does my earnings narrative end up when, for example, an analyst is preparing their earnings brief for an analyst call. And that really depends on how you structured your press release, where you send it, for example. How did you structure your release? How did you distribute it? How did you cite it? And how do you make sure that it is retrievable and credible in AI-generated inputs? So, for example, distribution via high authority newswire, which is a trusted source, ensures that it's no longer about press release coverage, it's about controlling your narrative in this AI-mediated environment. So it's no longer about just publishing content and hoping it will land, it's about getting the right analytics, getting that information about increasing shareholder engagement, where sentiment is shifting, etc. The third one is also the shift from a point-to-point solutions to a fully integrated intelligence platform. So currently IR teams are managing different audiences, content, websites, webcasts, regulatory filings, and the ones who are really ahead of the curves are the ones who are no longer accept that all of these are segmented, that it comes into a single workflow. Single workflow means that you have data which is no longer scrutinized, but actually give you intelligence, actionable intelligence to act on, allowing you to have a consistent messaging and operating model across IR and PR communications teams.
Right.
Thank you.
Maybe one question now to Nick from Q4. We're speaking a lot about a lot of data in IR. How can you unify the data and build a single source of truth, you know, to drive that engagement with the financial community?
Big question, Michael, and I'll try and keep the answer short. Data's proliferated for IR teams. The systems available to IR teams has also expanded dramatically. That doesn't make it any easier to know what is best practice and what you should be doing. At Q4, the way we think about systems and data, we try and approach this from a repeatable standpoint. So what for investor relations is a repeatable cycle? So we take, for example, a results cycle that IR teams follow. What are the constituent things that go into that specific part of the calendar? It could be preparing your narrative going into your results call. It could be executing your reporting cycle flawlessly. You'll also want to understand what the reaction of the market is to whatever it is that you've reported. To go and do that, you need a lot of data. You need a lot of inputs. And I think the thought I would put in people's minds is, have a think about all those inputs. Have a think about all the data you're using, the AI systems you may be interacting with today. How many of them are there? And can you do it more simply?
Thank you, Nick.
Carmen, what can you do technologically out of a conference call?
Thank you, Vera. Yes, I think here for us, Chorus Call, what it's important that in our experience, we can help, we can assist, and we can provide a tool and the solution that needs to work, okay? And thanks to the experience we have, we really can give this assistance to our client. But for us, earning calls are not longer only broadcast of your results, but it's about maximizing the reach, the engagement, and also the accessibility in real time. And I will give you some few examples here. We normally have one single format, the webcast, but what we want also to provide is to create multi-layers of experience. For that, first of all, is it needs to be a reliable, a secure, and a high-quality audio and video delivery. Okay, this is a must. And of course, it needs to work. Okay, that's also the point. First is accessibility and the reach. You need to have seamless dialing numbers. Also, of course, now web-based participation, and everything needs also to work using a mobile. This will ensure your investors to access your event without, from everywhere and without friction. Secondly is as we were talking about real-time intelligence, that we have the possibility to use instant live transcript, so that you have your event and you can have the subtitles of the content. You also have AI-powered keyword tagging, or you can have an instant replay. This will allow both companies and investors to get the key message of your call, and it needs to, of course, be there. Interaction and control. Your IR team need to have an advanced Q&A tool, may have moderators management or tools as well, and make sure that you get immediately statistic or analytics while you have your conference, because you want to know exactly who is in your call and don't be blind. And make sure that you prioritize your questions, you are able to talk about the relevant topics during your conference. And at the end, I would say the final point, but not the less important, the post-conference value creation. For that, after the event, you want to have a technology allowing you to have an immediate replay available. You will, of course, have statistic and analysis of what happened during your call, and also the transcript available online. This will continue to give you and deliver you a content asset, and that will help you to continue your work after the event. That, in short, the technology is a must, but is not only to communicate your results, but to make sure that you can exceed the reach, the deepen engagement, and of course get this additional insight that will allow you to have a help before and during, and of course after your event. But thank you so much, and as my operators team will say, thank you for your attention. We are glad to take your question. Please press star or star 1 or raise your hand for the Q&A session.
I do remember
Thank you
that
so
very
much.
well. Last but not least, EQS is also a provider that many of you know. And we'll finish with one question that is ubiquitous and everywhere. So how are you using AI, and how your clients going to benefit from it?
So my answer will take like 50 minutes. No, joking. So for us, it's important to understand that AI is everywhere. So also in washing machines. So we really have to know and to understand where to use AI properly and where it makes sense, basically. So we are really checking in our tool where there is a value for our clients for using AI, and that is supportive and not replacing the user. So the user should work smarter and faster, because as you all know, when you have an ad hoc announcement, you don't really have time to play around. So this is our goal, to have AI integrated for the future. But it's also very important for us to still have personal contact with our clients through our client service team here in Zurich, by the way, so that you are really safe, if we can say it like that, that there is still a person behind our tool. And I guess that AI will help us, but the human part is still very important for us. Thank you very much.
Thank you. So we still have you there. Okay, good. Any questions from the audience? If not, I thank you.